Welcome everyone to another episode of Facility Management Marketing Podcast. Dun, dun, dun. I'm your host, Javier. I don't know why I did that noise. I have no idea. I was like kind of running through my head. Today's episode is gonna be a little bit shorter than others. This is episode 51, if you were kind of wondering. But I'm gonna be going over KPIs that we track and that you should track for your marketing success as well too. So KPIs, key performance indicators, to make sure that your FM marketing strategy is working. Okay. Now I can't give you a benchmark. Okay, but then the benchmark will be relative to your business. So the best way I can explain this is that you can do general searches online to see what benchmarks are out there. And then from there, you can say, okay, we would categorize ourselves in this category. So therefore, this is what it is. That's one way of doing it. The other way is you track it for 3 months and you see what numbers you get. And then you see if you can improve those numbers over the next 3 months. That's probably the easiest way of doing it because now you're just benchmarking against yourself. Okay. So with that said, so KPIs that we track and all marketing should be tracking. Number one is email. So like in email, the things that we track in there are going to be open rate. Okay, so this is going to be the open rate of people opening your email. So like if you sent your email to 1,000 people and 100 people opened it, that's a 10% open rate. Does that make sense? Okay, so a standard, you should be looking in the high teens, low 20s. For marketing emails, okay? So I've got a hack around that as well too though, but won't go over that right now. Open rate is one of the top ones to look into. The next statistic that you wanna look into is what's called your CTR, which is your click-through rate. And that is, of those that opened, what are the ones that clicked through by clicking a link to whatever that call to action is. So example, you send an email, the email talks about your blog or whatever. That blog then points, that blog link is in the email. They click on that link, they go to the blog, they read the rest of the blog. That's a click-through rate. Does that make sense? So that is another stat that you want to be tracking in your emails. The open rate is gonna help you figure out if your subject lines are strong. All right. The click-through rate is gonna help you figure out if your content is relevant and good. Okay, does that make sense? So those are the two things that you want to be tracking that are huge. Now there's another one that's called click rate, and those is like, it's going to be the people that clicked on it from all emails sent out. So if you sent out 1,000 emails and you only had, say, 5 people click on it, your click rate's going to be like 0.05%. Okay, does that make sense so far? So click rate, it's everyone, and then of those everyone on that list that you just sent it to, they click something inside the email, like a link. Click-through rate is only those that opened the email that clicked through to something else. And so those are the things that you want to be tracking for email. All right. So when you're looking at email, that's what we look at. Now another thing that we look at is also transactions. And so that's more of like an internal thing because we're selling a package as well too as part of our services. And so that transaction is like a $250 transaction. That's not something that you would be tracking yourselves because unless you're selling something that someone can actually like a product they can buy, then yeah, like that would probably make sense. But otherwise, another thing that you can use for tracking are like meetings. So if you're sending out emails and one of the goals is to set up meetings, then you could have how many meetings did you set up this month? Like that could be a really solid goal to look at and start tracking as well too. So that's something that we also kind of monitor, not as much as we probably should be. So I need to go back and start looking into that. But yeah, meetings are definitely something that you want to be tracking as well too, and definitely look into those. So the next category that we track is social. So social media. And so social media is a little challenging because if you don't have some sort of tool like a HubSpot or a Hootsuite or a Buffer, then those are going to be difficult to track. But because we use HubSpot, we're able to track like a lot of information. So the things that we track with HubSpot for our social media strategy, this is all organic. This is not paid. This is all organic. Is going to be our audience growth. That's number one. So like how many people are we gaining every single month? All right. So you might have like say 100, and then like, in the month of June, you got to 110. So cool. You grew by 10%. And so we look at audience growth across all of our platforms, but we primarily focus on like Instagram to see like how well that's doing. So that's one. The next one we look at is also impressions. So we look at likes. So like people that like our content. Okay. So we look at seeing how that is growing. And so it's simple to track. The next one is impressions. I apologize. So impressions meaning like how many people are seeing this stuff. Okay. And it's challenging because sometimes the impressions go up a spike if you're actually using a platform, you have a channel and a strategy, and then they could go down because you may need to be posting differently. You might have to switch out your content. Like there's so much to this, and this is exactly what we're experiencing at the moment. And I'll be doing an episode explaining what we've changed and what we're going to be doing and all this other stuff in the near future. But point is that we use impressions to see how well some content's performing. Now, something to keep in mind is this. Some people say like, well, if I post once every week or so, I get more impressions than I do, me posting daily. That still doesn't mean that you should be posting once every week or so. You should be consistent on posting content. Like I'm just telling you that right now. All right, be consistent. So likes, impressions, audience growth, and there's one more, but I can't think of it at the moment. But those are the three key ones that we look at. And you might be thinking to yourself, like, Javier, those are vanity metrics. Like, that's just to make your ego better. Well, yeah, no shit. Okay, let me ask you something. Then how else are you going to measure this? And you're going to be like, well, new business. Okay, great. If you're not getting impressions, if you're not growing your audience, and if you're not getting likes, then how the hell are you going to get new business? I don't know. Exactly. So yes, we track new business. Yes, we track new leads from social. We on average are getting anywhere from 2 to 5 new leads just from organic social. Okay, just from organic social, 2 to 5 new leads per day. Okay, which is pretty solid if you ask me. Okay, and then I think in May we got 1 business from organic social. I haven't seen what June looks like. So we'll see what June looks like, all right? All right, now paid acquisition. All right, this is gonna be your paid ads, such as like Google ads, Facebook ads, LinkedIn ads, that sort of stuff. So what we track there's a lot of stats to track there. So to track performance of an ad, you can look at like cost per lead, all right, your CPL. All right, so like for instance, for our company, our cost per lead is like sitting around $2, $2.50, give or take. That's pretty good. And if you're thinking, well, we need that. No, you might be much higher. Like your cost per lead might be like in the $20 to $30, maybe $40 per lead. And you're like, that's ridiculous. It might be less. I don't know. The only way to figure that out is if you, guess what? You run the ads. And then you start measuring it and you start determining like, it is worth it for me to pay $20 for a lead because then it's a solid lead. Like, do you see what I'm trying to get to? So cost per lead is one thing that we track. So that's something that's important. Like another one that we track is what we call MQLs, marketing qualified leads. Like it's like how many are we getting on a daily basis? We typically get anywhere from about 100 to 120 leads per day. Roughly, okay? And then SQOs, sales qualified opportunities. So of those marketing qualified leads, which ones turn into an opportunity? Meaning the lead basically picks up the phone like, yeah, I'm interested in a wrap. I can't start right now. Can you call me tomorrow? Or I'm interested in 2 weeks. Give me a shout. It's something like that. So that's going to be a sales qualified opportunity is what we classify them as, okay? And so that's another way of us measuring paid acquisition, all right? Conversion rate is also what we, for paid acquisition, is what we're using. So like conversion rate is like how many people come to your site and convert into a lead, okay? So like if 1,000 people came to the site and you get 100 leads, then that's a 10% conversion, right? So that is something to measure. And you should be measuring that really regularly, because if your conversions are low, and you might be wondering what's considered low, it's all relevant. You're going to have to do a little bit of research, because every facility company is going to be a little different, especially what your offer is. If you're offering meetings, is that considered a conversion for you? If you're offering a lead magnet, is that considered a conversion for you? Like for RatMate, we're offering we have a tool, and then for them to see their price, it's, they have to put in their information. And so we have a lead to or traffic to lead conversion rate of almost 25%, which is through the roof. All right. That's 1 in 4 people that are converting. That's really good. But something else to think about is that these conversion rates, they're all gonna be relevant. So maybe 10% is good for you. Maybe 5% is good for your company. I've seen conversion rates anywhere that hover in the high single digits, low double digits. So 8, 9, 10, 11, 12. That's pretty decent. Okay. So conversion rates can be another KPI to be tracking to see how well your marketing is doing. And the last one for at least paid acquisition is how much business are you getting out of it? So you got these leads, marketing qualified leads, you got these sales qualified opportunities. How many did you close? Now I know that for facility company, your sales process could be 3, 6, 9, 12, 18 months. Totally understand that. But you still got to track that, because that's creating pipeline. And so you're going to have to start determining what pipeline is going to be as well too. You're okay, so if this is an SQO, the pipeline for this is going to be $30,000 or $150,000 or $1.5 million. And so what you're doing is you're trying to build pipeline. You're trying to build up this pipeline, knowing that 6 months from now, 12 months from now, what you built today is going to convert to 1.5 million in 12 months. And so you're building this pipeline, and you're going to eventually want to know what your, lead to customer is for paid acquisition. And we know as a marketer that all we're doing at the moment is just building pipeline. That's kind of what we're doing at RatMate. But our sales cycle is a little bit less, because we're selling on average $2,200 wraps on average. Some more, some less, but that's about the average. All right, moving on to website. So for website, you want to be tracking your traffic, your unique views every single month. Okay, so you want to see what that is. You're going to want to be tracking your time on the site, how long they're spending the time on the site. I think every platform has something different. And if you're how do you find this stuff for website stuff? Google Analytics. Just look it up, Google Analytics. Input the code to your site. Have your web design person do this. Don't you do this. All right, trust me on this part. Unless you're tech savvy and you can figure it out, or you've watched plenty of YouTube videos, then have at it, But this is going to give you a lot of that data. So traffic, unique visitors that have come to your site. Average time spent on the website. All right. Your bounce rate, how quickly someone is leaving the page or pages of your site. Okay. Those are 3 key metrics to be tracking for your website. And so there's a few others, but I would say for most companies, you can tell if your site's doing well, it's going to be growing as far as unique visitors. Okay, growing, because that means that you're growing organically. Does this make sense? And then time on the site should be going up if you're producing really good content. So if you're putting out really good blogs and people are reading it and they're spending time on a tool that you've created, then the time on the site should be going up. All right. The number of pages that they view per session, that's another stat to track. So if they're viewing 1 page, that means that you have 1 good page and then no one cares. But if they're viewing like 2 or 3 or 4 pages, that means that people are going deep into your content. So they go to the homepage and they click on the About Us, and they click on a blog post, and they click on something else, and then they move on. So they're getting deep into your site. That's important too. So, number of pages visited per session, that's I think that's what it's called. And then the last one I mentioned is bounce rate. So those are 4 ways of just kind of seeing how well your website's performing. And usually I use Google Analytics to evaluate this. For like the email piece that I mentioned earlier, if you're using an email system like HubSpot, that already does it for you. If you're using like Keep or MailChimp, they all have something for you to measure your performance on that. Social, like I said, like Hootsuite, HubSpot, Buffer, those all have measuring tools. All right, other KPIs that we track as a company is revenue. So we track revenue based off of our marketing efforts. So like, we'll say, hey, we generated this many leads. Of those leads, we have this many SQOs. Of those SQOs, this is how much we've closed in new design deposits. And that's kind of how we calculate things for us. And then, that creates pipeline for us. That creates opportunities for us in the near future. Some other things to calculate in marketing is going to be your CAC, which is your cost of acquiring a customer. Okay? Cost to acquire a customer. And so that is the calculation of CAC is going to be your marketing team, your sales team, and technically you're supposed to use any kind of technology involved to help you market and sell more, divided by how many customers you acquired. Okay? Does this make sense? So let's just make a rough number. Let's say your sales team, as far as their salaries and commissions and stuff, and the marketing team, salaries, and then like your web-based tools, like your SaaS products, let's just say it's $50,000. All right. And then you got, 50 new customers. 50 customers, what does that come out to be? I don't even know. Scratch math. Like $50,000 divided by 50 customers. That's $1,000 to acquire a customer. Now, depending on industry, that might be good, that might be bad. Okay, so that's just something to kind of think about. But like what you also got to think about is that like it might cost a lot to acquire a customer, but then like if a customer is like $1 million account, then guess what? Like, would you pay $1,000 to acquire a customer to make $1 million? I think most people would say, yeah. They'd probably even go as far as like, I'd spend $50,000 to get $1 million account. Do you see what I'm saying? So CAC is definitely a good number to use. However, it's going to be difficult to kind of like nail it in the first few months. And then you're just going to have to see like, okay, if we lower our CAC, is the quality of the customer better? If we increase our CAC, is the quality of the customer better? Because lower CAC doesn't always mean that it's better customers. Lower CAC can mean like you're getting shittier customers, and then you have to like work harder to try to like find something out of it. But if you're having like a higher CAC because your sales process is longer, etc., it might be worth the higher amount of money spent. LTV is your lifetime value of a customer. So everyone should be tracking this, what the lifetime value of a customer is. It's so surprising that we don't see that. Like when I was running my martial arts studio, we knew it by heart. Like it was 18 months. I mean, I don't remember what the number was, but 18 months is about the average that someone would spend with us, roughly 18 months. And they would be spending roughly $175 per month. So the average that we would make per customer lifetime value was $3,100, $3,150. Okay, that's the average. So that should tell you that like, all right, if the lifetime value of a customer is X, then I can spend Y to acquire that customer. So like if I knew that $3,150 was what the lifetime value of a customer was, right? And I got 10 new customers, that lifetime value is gonna be $31,500, right? Because that's what we usually would get. So if I spent $3,000 on marketing, like from website to ads to like events and other stuff, whatever, it's 10% of that. That's nothing. Do you see what I'm saying? So like, that's why having a lifetime value is so important. And then ROAS is return on ad spend. This is pretty straightforward. It's you spent this much and to like on ads, and then you made this much in return. So like, that's a simple number to kind of come up with. That's going to tell you how well your ads are doing and how well the leads that are coming in that are converting into new business. So that's an important number to actually start tracking as well too. So anyways, I hope this all makes sense. So these are the KPIs that we typically use. I didn't go through every single thing that we track, but this is something that we use as a business. This is something that you should be tracking in your business as well too, to track if marketing is performing at a level that's fair. Now, to keep in mind is that you might be wanting to benchmark this. Like, well, how do I benchmark this? Honestly, in my opinion, don't benchmark it. Just track it and then create your benchmark from the previous 3 months. So track it for 3 months, see how it is, just get a number, all right? And then be like, okay, do some research, start digging around and see if you can improve it. See if you can decrease it, or improve or make it higher. So whatever the case is, like, you can do this. It's not, it's gonna be hard, but that's the best way I would suggest on doing this piece of the tracking piece, all right? So hope this all makes sense. If you have any questions, let me know. 3 things I've always asked at the end of these podcasts, except for my previous one, I have no clue why. Give us a 5-star review on Spotify or on Apple Podcasts. Connect with me on LinkedIn. Yes, I want to actually connect with you on LinkedIn. So reach out to me if you have any questions, comments. If there's any episodes that you're like, hey, I would love for you to talk about this. Let me know so that I know I'm putting out the content that means something to you. And number 3, share this podcast with somebody else, because I want to keep growing this podcast. I want to keep producing more valuable content to you, your team, everybody. All right. So hope you have a wonderful day, and I'll talk to everybody later.